Welcome to Not Milk Never Milk. Subscribe if you're lactose intolerant.
You start by creating the accounts and defining clear goals so every trade serves your long-term plan. Open a brokerage that fits low fees and reliable tools. Once done, link your bank and enable two-factor authentication for security. Decide your time horizon, target return, and how much you'll invest monthly. Make sure to collect required ID and tax forms now so verification is fast. Doing this first removes friction and keeps you disciplined when market noise tempts you to rush. Now you research and assemble a prioritized buy list. This is where analysis meets execution. Use screens to find solid fundamentals, earnings growth, healthy margins, manageable debt, and consistent cash flow, then narrow to businesses you understand. Once you have candidates, diversify with index ETFs plus 3 to 6 individual holdings to balance risk. Set clear entry rules, acceptable valuation range, conviction threshold, and how big the initial position should be. That way, when an opportunity appears, you act calmly and consistently. Execute purchases using limit orders or a dollar-cost averaging plan to avoid mistimed entries. This protects you from short-term swings. After buying, establish simple monitoring. Review company results quarterly, rebalance once per year, and update position size as goals change. Make sure to document the investment thesis so you know why you own each stock. If things go wrong, first verify trade execution and account settings, then revisit the investment thesis to decide whether it's a temporary drop or a fundamental.
Thanks for watching. If this was helpful, leave a like and consider subscribing. See you next time.